Welcome to the Explainer. Today, we are going to unlock two of the most powerful and widely used tools in any trader's toolkit. We're going to break down the MACD and the RSI, not just as separate indicators, but as a dynamic duo that can bring some serious clarity to your trading. You ever stare at a financial chart and just feel lost? Like you're just guessing? The price goes up, it goes down, you've got all these lines crossing your screen. So many ambitious traders feel overwhelmed by that chaos. But what if you could actually decode it? What if you could make confident, informed decisions? Well, that's exactly what we're going to do today. Okay, so here's the game plan. First, we'll tackle the MACD, which is going to be our trend-following compass. Then, we'll get to know the RSI, our meter for market momentum. After that, we combine them into what I call the golden key strategy. Then, we'll uncover a really cool advanced signal. And finally, we'll talk about the trading traps you absolutely have to avoid. All right, first up, the MACD. I want you to think of this thing as your compass for navigating the markets. It doesn't just point you in the right direction of the trend, it also tells you about the momentum, the actual force that's pushing that trend along. So what is the MACD, really? It stands for Moving Average Convergence Divergence, which, sounds complicated. But the idea behind it, from its creator, Gerald Opel, is actually pretty genius. It just watches the relationship between two different moving averages of a price. By seeing how they pull apart or converge, the MACD gives us the market's underlying pulse. It's not just about direction. It's about the strength behind the move. The MACD actually has three core parts that work together in perfect harmony. First, there's the MACD line itself. That's the engine, showing you what's happening with momentum right now. Then you have the signal line, which is basically a smoothed-out version of the MACD line that gives us a baseline for confirmation. And finally, my favorite part, the histogram. It's like a visual power meter. The bigger the bars, the stronger the momentum is. Simple as that. So how do you actually use this thing? Well, the most basic signals are called crossovers. When that faster MACD line crosses above the slower signal line, that's a bullish crossover. It's a hint that buying momentum is building. And on the flip side, when the MACD line dives below the signal line, that's a bearish crossover, a warning sign that selling pressure is taking over. These are your bread and butter entry and exit signals. All right, let's grab our second tool, the RSI, and see how it builds on what we just learned. So if the MACD is our compass for direction and momentum, I want you to think of the RSI as our meter. It tells us about the speed of price changes and, this is crucial, when a move might be getting tired and running out of steam. So the RSI, or Relative Strength Index, this one's from another trading legend, J. Wells Wilder Jr. Now, it does something a little different from the MACD. It's not really tracking the trend itself, but the speed and the exhaustion of price moves. It all happens on this simple 0 to 100 scale, and its main job is to be an early warning system, telling you when a buying or selling frenzy has gone a little too far. Okay, reading the RSI is pretty straightforward. You're just watching three key levels. If it gets above 70, the market is probably overbought. Think of it as being overhyped and maybe due for a cool down. If it drops below 30, it's likely oversold, and a bounce could be coming. And that 50 line right in the middle? That's the 50-yard line. Whichever side the RSI is on tells you who's probably in control of the ball, the bulls or the bears. Okay, this is where it gets really fun. We're going to take our compass, the MACD, and our meter, the RSI, and put them together. This is what we call the golden key strategy. And the real power here is using one indicator to give you a signal and the other to confirm it. This is a total game changer for filtering out false signals. So, for a really high-confidence buy signal, you need two things to line up. It's a 1-2 punch. First, you watch for that bullish crossover on the MACD. That's your alert. But you don't jump in yet. You wait. You wait for the RSI to confirm that strength, either by climbing out of that oversold area or by decisively crossing over that 50-yard line. And here's what that looks like in the real world. You get your first signal, right? The MACD crosses up. Now, a novice trader might jump in right there, but we wait. The real power comes when that signal gets back up from the RSI, which is also showing strength by rising from that oversold zone. When you get that 1-2 combo, that dual confirmation, well, that can be the start of a really nice sustained move up. And you guessed it, the same exact logic works for a sell signal. Just, in reverse. You're looking for that bearish MACD crossover, where the MACD line dips below the signal line. That's your first warning flag. Then you look over at your RSI for confirmation. Is it falling from that overbought zone above 70, or is it bricking below the 50-yard line? And this same combo gives you an incredibly powerful exit signal. Imagine this. The MACD gives you a bearish crossover, signaling trouble ahead. But you hold on for a second. Then you see the RSI confirming it by falling from its overbought territory. That dual warning is a fantastic way to spot a potential top and know when it's time to protect your profits before a big drop. All right, ready to level up a bit? Let's talk about a more advanced but super powerful signal called divergence. This is what happens when the price chart is telling you one story, but your momentum indicators are telling you a completely different one. So what this basically means is that divergence is a huge red flag. It's a conflict. The price is doing one thing, but the momentum behind it is doing the exact opposite. It's a major warning that the fuel running that trend is about to run out, even if the price is still chugging along. It is often a leading signal for a major reversal. And there are two main flavors of this. You've got bullish divergence. Think of it as hidden strength. The price makes a new low, but the indicator makes a higher low. That's a hint that sellers are getting exhausted. And then you have bearish divergence, or hidden weakness. The price hits a new high, but the indicator makes a lower high, suggesting the buyers are running out of gas. Spotting these can help you get ahead of major turning points. Okay, before you run off and start using these tools, we gotta have a little reality check. Because the MACD and RSI are amazing, but they're not some kind of magic crystal ball. There are some really common traps that new and even experienced traders fall into. And just being aware of them is critical for success. So let's go through the 4 biggest mistakes traders make. Seriously, avoiding these is half the battle. First, over-reliance, just staring at the indicators and totally ignoring the price chart itself. Second, ignoring the time frame. A buy signal on a 5-minute chart means nothing if the daily chart is in a total nosedive. Third, impatience, jumping the gun without waiting for that all-important confirmation. And the biggest one of all, no risk management, forgetting your stop loss. Honestly, nothing else we talked about matters if you get this one wrong. And this right here, this really says it all. Your number one job as a trader isn't to make money. Nope. It's to protect your capital so you can live to trade another day. These indicators are fantastic for spotting opportunities, but it's your risk management that will keep you in the game. So there you have it. When you thoughtfully combine the MACD as your compass and the RSI as your exhaustion meter, you can seriously transform your trading. You can go from just guessing in the chaos to making informed, high-confidence decisions. You now have the golden key. The only question is, are you ready to use it and start trading with clarity?